Welcome back. Uber, Lyft and DoorDash all working to navigate California's landmark gig economy law. But could New York be next? Deidre Bosa is here with that story. Hey, Dee.
Hey, Wilf. Now, this has always been the biggest fear with California's law, that other states would consider similar legislation and they would also move forward. Yesterday, New York Governor Andrew Cuomo called gig economy jobs exploitative and abusive, and he said it must stop now. New York taking up the cause is especially bad news for Uber, which, as you can see from this map, has a far greater presence on the East Coast and particularly in New York. It's one of its largest markets. Now, for Uber and the other names you mentioned, this has the potential, of course, to cost more time and money, just as they're trying to figure out how to get to profitability. Wilf.
The app changes that are being made, I mean, how effective are they in helping the companies navigate it in terms of the bottom line as opposed to just the functionalities?
Yeah, it's a good question because it doesn't automatically make their independent contractors employees. These are changes that affects us, the riders, also the drivers. So things like scaling back their rewards programs. And remember that Uber, Lyft, DoorDash, others have really been relying on the sort of subscription revenue to cut down on their cash burn. They've been promoting them heavily. Now Uber having to pull back on that is not necessarily good. They also cannot give you sort of an exact pricing for a trip that you're going to take. They have to give you an estimated range. So I think they're trying to figure it out. It's not immediately clear how this complies with AB5, but there's so much going on here in California that we're likely to see big changes and certainly lots of lawsuits as all of these companies try and figure it out.